Hello. All right. Can you guys hear me and see my screen? Let me know in the chat if you can hear me so I can get moving forward here. Thank you, Sam. Sam. Thank you, Alex. Thank you, Mr. Phibbs. Welcome to the stream. Appreciate you guys being here. All right. So we'll get into what the market's doing here in a minute. But first, the whole point of our live stream is to feature the indicator. Hopefully, this Tuesday is better than Tuesdays have passed. I do this on Tuesday, and it seems to be the worst trading day of the week for the market. So yesterday had a monster day. We had the sell signal right at the open. Trend day, so we use trend day rules, meaning the buys no longer matter. Caught this strong move down 6 points here, big winner. We took the first buy because you can get reversals, so we took one shot at a reversal here, seeing if they could hold that support and go. They did not, so then we were sit on hands rest of the day. There's also the advanced trend day strategy. But before we get into that stuff, let's talk about what we're looking at. So if you're new here, this is Invest with Jacob, and we do Elliott wave theory, but more importantly, what we do is day trade and swing trade really effectively because of our indicator that we've built. It's called IWJ Pivot Point Pro. You can see it here. It's only in trading view. And turn it off and on. You can see the buy and sell signals go away. And the yellow here on the left, that's our pre-market trading. We have that turned on. On the right, we have our post-market trading in blue. That helps keep the indicator up to date with where we're at in the after hours trading so that it can have proper signals at the open. And then we have to have real-time data on ES and NQ because if you look at the settings, we are monitoring ES and NQ as well so that when we do get a trade signal, it is concurrent on all three markets, meaning they're all doing the same thing. That indicates broad buying or broad selling and becomes much more likely that the trade that comes up is likely to follow through. If the NQ is going down and the ES is going up, in other words, they're not in sync, you're not going to get a trade because that's going to lead to a choppy market, and we're not going to get strong moves that we're looking for in order to find these kind of moves where you get a sell that goes straight down 6 points. So we're already monitoring these things. And then it's as simple as getting a sell signal and selling and then following the rules. So this is a trend day, so it's a little different. We'll get into that in just 1 second. But you see a sell here, you sell, and then we ignore the buys because it's a trend day. When you do or if you do choose to get the indicator, you do get plenty of training on it. So if you scroll down here, you can see that one, you give me your trading view username so I can give you access. And then the important information here, if you click to open one, you'll get a discount on it by using this link right here so you can get it cheaper. And then it'll tell you how to set up trading view. It'll tell you how to set up the indicator, your day trading strategy, your trend day strategy, weekly swing, and how to use that properly. So you get plenty of training on the indicator and how to use it. So, and it's super simple. It's not like that training is going to be like, okay, if X equals Z and then carry the 1 and blah, blah, blah. It's really, really simple, guys. Trend days, super simple. Yesterday, our pre-market low was right about here. So what we look for on a trend day, we look for the market to break either the pre-market low or pre-market high, then come back, test a VWAP in the 21, and then come back and break the low that it made right here. And once it does that, it's a strong indication that we're in a trend day. Okay, and what that means is we're going to continue down, and then all bounces should hold the 21 in VWAP, which they tried here, and then finally late in the day, when they were done trending, they got back above the 21, and that's when they started to move up. So trend days, really super simple to spot, and then you kind of adjust from there. your trading style. So that's the only real thing you have to look for is it a trend day? Otherwise, you just buy when it says buy and sell when it says sell. I stopped trading at 10 a.m. on each day because after that, the market can tend to get choppy and slow. You want most of your trades to happen in the first hour or two of the day. So that's what we look for there. In Q100 on a rip, I think possible 20K in play. I don't think the down move is done. No, I mean, that's our path, right? So let's go ahead and while we're waiting here, go through some of that. So first, before I do that, 30% off your first month with code monthly30. It should be on the bottom of your screen there. When you go sign up, you just go to membership plans and you scroll down to the indicators here. So at the top of the page, you'll see my ugly face, and then you scroll down. You'll see our monthly rooms, which are excellent as well if you want somebody to hold your hand while you're using the indicator. I give all the trades, all the stops, everything that you see today, you get in the monthly room. And then I also, kind of tell you, is it and when it is a trend day, all those types of things. Scroll down. We have our daily live calls. So every day we go through our live calls. I go through all of the Mag 7, the SPY, the ES, the NQ, Bitcoin, gold, and then whatever stocks you guys bring to the table. If you have questions, it's a live interactive call. So you can say, hey, I want to see what Starbucks is doing, and I'll break down Starbucks for you. So if you want to test out our live call to see what the room's all about, you can do that. And then further down, here's where the indicators are. You're going to hit click here to get the indicator, right? And then so you know where to put in the coupon code. You scroll down a little bit toward the bottom here, and it says have a coupon. You click that. You put in your coupon code and hit enter, and you'll get the discount there. Since I clicked on the yearly, I can't put in the coupon code because it won't work. And it won't let me do the monthly because I already have it. So, so that's that. So make sure you check that out, guys. Really, really strong indicator. Biggest thing is you get the 30-day money back guarantee. So test it out. You don't even have to trade with it. You can literally get the indicator, put it on your chart, and watch it, or paper trade with it and see how it does. So you don't lose or make any money. I would venture to say if you follow the rules, you will make money. That's what we do every single month, over and over again. But you can test it out for free, so you don't have to trade and risk any money. See how it works. And if you don't like it, let me know. We'll refund it. Like 99% of people do, and you'll love it. It's an absolute game changer. Our results, I will pull up in just a second, and then we'll go through the counts. If you have any questions, please type them in the chat. I'm happy to answer any and all questions. I'm an open book. If it's about trading, if it's about me, if it's about my backstory, if it's about whatever, I'm here for it. So I'm pretty open in that way. I don't have anything to hide. While we're waiting for Excel to come up with my numbers, let's look at the count. So we talked about this in my room. If you're in my room, you know this already. We talked about this A leg stopping around where it did. We were looking for this to be A of B, and then I said that my preferred path was A, B, and C of B to come back down to make a lower low, and then back up in C of this B wave. So this B wave needs to move back over here. So this was my preferred path because this market does need a little bit of time to heal if it's going to continue to the downside, which right now is the primary path. That doesn't mean today is a guaranteed up day. We're not out of the woods yet as far as downward pressure. So right now this C wave of B, this circle right here, B of this B, and now we're in C. This can be 3, 4, and 5 to make another low, and then back up into this box that I have drawn on here from 56 to 5800, extremely powerful supply zone. I would expect rejection from there. So I expect a bounce off of this low area. I expect rejection off of this high area. And then we'll figure out from there what exactly the market's going to do. So if it comes up here and we get a 3-wave rejection, we would expect higher. If it comes up there and we get a 5-wave rejection, we would expect lower. So you'd expect this kind of move here. So that's kind of where we stand really on both charts. They're pretty much exactly the same. NASDAQ again. You have your A leg down, and then A, B, and C is what we're looking for back up into this box, which is 19.5 to 20,005. Looking for either a 3 wave if you're bullish or a 5 wave if you're bearish. Again, they are not out of the woods yet here. They can be in 4 and 5 before we go higher. But back above 18,352, and I will be on board with the market being in C up. Any questions on any of those counts while we're waiting? Okay, so let's look at the results of the indicator over the past year and change. So from all of 2024 and then so far where we're at in 2025. And what I want to iterate here, very important, guys, very, very important. This is not a get-rich-quick scheme. This is not some kind of scammy, oh, you're going to make $1 billion because you have my indicator, ha ha ha. This is trading at its finest. This is setting stops, entering trades in a disciplined manner, using the correct sizing, using correct profit taking, using a correct trading model, and making money hand over fist over and over again. That's what it is. It's not some kind of guarantee that you're going to be a millionaire tomorrow. It's none of that. All of that is garbage, scammy, bullcrap, and that's not me. I mentioned, if you watched my video last night, I was really sad to hear about David Frost over at My Strategic Forecast. Really, really great guy and pillar in this community of YouTube because he gave you good content. He cared about his people, and he taught you how to trade, and that's what's important. All these people that have no idea what they're doing, put out bullshit, give you a trade and walk away, don't answer to anything, just want your money. Those are people I can't stand. They're one of the reasons I do this. This is true trading in the way it's supposed to be done. Are there better traders than me? A lot. Are there worse traders than me? More than a lot. I'm not here to tell you I am the messiah of trading. I'm here to tell you that what I do works, and if you follow it, would work for you. It's not a secret code that only I can use. It's a plan with discipline and action, and that's how it works. You can see last year, $35,000. This is based on a $100,000 account. We trade 25 contracts per trade. Last year we made 35.5%, so 35,475. This year we've already made 29,000. We continue to tweak and update the indicator to make it better. And this year you can see those changes taking effect. We've had our record month, a near record month. We've only had one 5-figure month last year. We've had almost 2 already this year. We had one well over, 4,000 higher than our record month. And then another one here real close, and April is trending really well. So it works. The system works. Whether it works today or not, I can't tell you. It's a day out of the year that we trade. Tuesdays have been weird, but we're going to put it on display and see how it goes, and that's what we're here for. So I teach, I give you tools, and I want you to be successful. That's the only thing I really care about. I know that I'm successful. I want you to be successful. So that's why we're here, and that's what we're doing. Questions from anybody? And I hope you guys saw on there were losing months. Let me see if I can just Control Z that real quick. There are losing months on here. This was a losing month, March of 2024. So was the November and December. Low volume trading is harder to trade because during the holiday season, that's what you get. And so November really got us. It was not a great month for us, and neither was December. But November was really bad. And that happens. You're going to go through winning and losing streaks. So I don't every month or every day or every week should be a winner, because that's just not life. That's not how it works. This is why sizing is important. This is why understanding stops and how to do that is important, because this minus 6,000 could have been minus 30,000 if you didn't manage your trades, minus 100,000, minus whatever. You can blow up an account really fast. Is this November uncommon? Absolutely. I mean, if you look at all the rest of the months, this is an outlier. Things happen. Sometimes you just have things not going your way because of whatever the market's doing. It's not a perfect science, but it is a science. So right now we're dealing with a 1% gap up to start the day. That doesn't mean it's a trend day, okay? That means we're starting off on a trend up, but they still have to identify a trend day. Here's your pre-market high. They got to break the pre-market high, back test V1, break back over this high here. If they do that, then we can start talking about it being a trend day. As far as the indicator goes, I did not go over this part of it. It looks at about 74 things. They are mostly forward-looking things. So what I mean by that is it's looking at, for instance, here's a few things that it's definitely looking at. It's looking at the pre-market high as a heavy resistance zone. So that is a potential area to see a trade. It's looking at the pre-market low, and this is not a good accurate pre-market low because of the gap here. We'll get a better one off the ES, but it's looking at the pre-market low as a potential trading area because that is going to be a solid support area. It's also looking at supply and demand areas. It's looking at price action. It's looking at moving averages, but not as heavily weighted. So everything has a weight to it, meaning volume supply and volume demand areas are heavily weighted, and moving average are not as heavily weighted. So it's a price action indicator. It's forward looking, which is how we're able to get tops and bottoms, because it sees where the resistance and support is and it reacts off of that. Once it sees that enough conditions have been met to say that the market should bounce or the market should drop, it issues a buy or sell. Now, again, in the after hours, this is all low volume nonsense trading. We don't trade any of this because it's not reliable. You need volume for the trades. So that's why we only trade regular trading hours, and we only trade till 10 a.m. because that's when volume really starts to drop, until the close at least. So it's a forward-looking indicator, which is unlike most indicators. Most indicators are watching two moving averages, right? And they're waiting for this moving average to finally cross above this moving average. And by that time, price has already done this, and you're getting in way up here. We're looking to get in down here. So these are too late. They're too far behind. We don't want that kind of indicator because we're already too late to the party. I'm curious, the two paths from the bigger picture previous top. I don't understand the 1-2-1-2 setup. Does that just mean it's 2 of trend? So a 1-2, if you're asking what a 1-2-1-2 setup is, it can only happen in impulsive waves. So either a C wave or an impulsive 1, 2, 3, 4, 5. And what you get, so if we're just talking about a move up, you have a wave 1, so that's the first one of the 1-2, and you have a wave 2, so that's 1 and 2, right? Then you have 1 of 3, because 3 is going to be an extended wave, 2 of 3, so that's your second 1-2. So you have wave 1, wave 2, wave 1 of 3, wave 2 of 3. That's your 1-2, 1-2, and then 3 of 3 is always your strongest wave, so that's where you're looking for the breakout. And this is a thing, guys, if you're curious or skeptical of Elliott wave, but you like price action, then you're not listening to what's going on with Elliott wave. Because what happens is the market comes down, finds support, right? And then the first resistance is almost always where wave one comes up to, the first major resistance zone. And so what you have is wave one comes to resistance and fails. So then you get a wave two that makes a higher low off of the bottom. Okay. Then wave one of three comes back into this zone, fails again, but easier, and holds this low, so it makes another higher low. Then we come back, and typically you're going to chop right here around this resistance instead of reject. You chop, and then you break through, and what happens is this causes a squeeze effect. So you have the resistance zone the bears can't hold anymore. The bulls get through, and you get a squeeze. And this is why 3 of 3s are so powerful, because they get through the resistance. All the bears have to switch to being bulls, and this creates the squeeze. It's all built around price action. It's not some magical, oh, the market goes up and down, now it must go up again. It's all built on price action. It is the most durable price action methodology there is, in my opinion. If have noticed that U indicator or arrow appear and sometimes it's gone and we are in. Okay. Struggling with that sentence, but I think what you're saying is sometimes the arrow comes and goes, and that is true. And if you watch the training, you know how to handle that. So the arrow coming and going is an advantage, and we use it that way. So if you've got a line here, okay, and the market's moving, so let's say the market is moving up. So the market's moving up, and let's say we get a buy signal right here. That buy signal isn't going to solidify until the close of the candle, but it's going to tell you when conditions are right immediately so that you can get in the trade. Is there a time that buy signal disappears and fails and we lose a trade? Yep. Is there a time that the buy signal is there, it goes up, we win the trade, still comes back down in the same bar, and we get stopped out, but we have a winning trade and you never see that buy signal on the chart? Yep. So there's both winning and losing trades that happen. But what we do is as soon as we see the buy or sell, we enter the trade so we get the best possible entry on the trade. And if the trade fails, it fails. That's just part of it. You know, you're not going to have a perfect indicator. And if you wait, okay, so here's the negative. Let's go back and look at yesterday. I don't know if yesterday is going to be a great example. No, there'll be a different one we can do better. So this one, at the open, if you wait until the bar closes, this was a winning trade right here. We got in as soon as the market opened. We got a buy signal at 531. They took it up to 533.64. So it was about a 2-point move right at the open. But if you waited till this bar closed up here at 532, then you only got this little tiny move up and you failed. So by getting in as soon as this buy signal appears, we have a winning trade. If you wait till this candle closes, you have a losing trade. So all of that balances out where, yeah, there's going to be some times that this buy signal appears right at the open and then doesn't and goes away and you get a losing trade. But there's also going to be times that it allows you to have a winning trade because you got in right away. And there's more often than not that we have winning trades because of it. So I don't, that is all covered in the training, how to handle that, and that it does happen. It's not something I'm trying to hide or anything. I'm pretty upfront with you guys. It's just how you trade it. Sometimes indicators show in 1 minute, but not in 5 minutes, or vice versa. Is that normal? Yeah. I mean, you're talking about different time frames. So in the 1 minute, the 1 minute's always going to show usually going to show first because 1 minute charts are effectively useless in my opinion because every other chart supersedes them. But when you're talking, so things build from small to large, right? So you get a 1 minute indication here, a 5 minute indication, a 1 hour indication, a daily indication, and so on. You need more because the trend is different. So on a 5 minute chart, we're looking for a 7 to 10 ES point move in most cases. Now with volatility being what it is right now, you're getting more of a 15 to 20 point move. But in a normal trading day, when the volatility is down around a normal level, we're looking for 7 to 10 point moves with potential, meaning the first move is going to be a 20% win, and then as long as they can get through wherever they got to get through, we can turn it into a monster, and we have tons and tons of monster trades. You know, I talked about David earlier. One of David's favorite lines is base hits gets you in the Hall of Fame. Ichiro Suzuki had like 4,000 hits or whatever he had. I don't know. He's going to be in the Hall of Fame, and he wasn't a home run hitter. He wasn't a flashy guy. He wasn't much of anything, but he had a great moving batting average, and he got base hits, and he's going to be in the Hall of Fame. Okay, we got to sell here to start. I did not realize we were at the open, so I'm not ready. That sinks. My bad. Dang it. Let me get to the right place here. Today's the 22nd. All right. We are short at 240. Short at 240, guys. I got to get this all in. I am way behind. Dang. My bad, folks. My bad. You got me rolling, and I didn't look at the time. Short at 240. We are at 519 strike. I'm getting all this put in my channel here. And then our stop is going to be, give me 1 second here, 520.20 is our stop. Okay, and we'll go from there. Now the bears are going to have to get through VWAP in the 21 here. This is going to be this resistance. We are in at 240. That's 48 cents for 20%. So that's going to be our first take is going to be 288. That's what we're looking for to get our first take if the bears can follow through here. We could have got a better entry there. That was my fault. We'll see if they can get through VWAP in the 21. Typically on trend days, they will not. So this will be an interesting kind of key for the day. Okay, now that I can see price better, I'm going to move my stop actually up a little bit to 520.40. And the reason for that is where the sell signal came in at. So typically I use about a 50-cent stop, but right now we are in a more volatile market, so you're getting a little bit of wider moves. So we want to expand that stop a little bit because of that. So apologies for this first trade. I was a little bit behind. I didn't look at the time when I was answering questions. That is my fault. I will be dialed in now. Oh, god dang it. Boy, I'm all over today. You guys got me all rattled. All right, so we've tested the open high here, coming back down to the 21 and VWAP. We'd like to see them close around this area and then push down into the pre-market low around 517.29. This is not the true pre-market low. It is in the sense that it's the pre-market like yellow, but the actual low is going to be down here in the 512 area. Hi, Jacob. Are we going to trade today here? Yeah, when I do live streams, I mean, I'll put the trades in Discord so you guys have them, but we are going to trade here. Here's where you're going to get all your updates for until the live stream ends, and then I'll be back in Discord like normal. So you can see here we have our put support 0 DTE. This is 0 days to expiration options. This is telling you where the highest level is. So this is going to be resistance, which is why we likely got to sell off of this area. There was weakening in the buying as well as hitting this resistance zone. So we did get a sell there. And then this will be big support down here. The pre-market low right above that is the 1-day minimum. That's usually pretty good support, which you can see was kind of where they held. They spiked below that a little bit, but that's going to be a key area to take money off, that 517.77 area. But my strategy is the first part of the trade. So we got in for $2.40 on this trade. So that is we want to take 20% for our first win. So that's 48 cents. And you multiply that by 100, and that's $48. And of course, I do 25 contracts, so you know that's a 960 and another 240, so 11, like $1,200. So when people say I'm not doing this for pennies, no, you're not. If you do, 25 contracts, you're doing it for dollars, and $1,000 is a nice trade. So again, you take a small win because it counters the small losses. And all of this is taught, guys, in the training videos. So you set your stop, right? So our stop's right about here somewhere. And our first take's going to be right about where the black line is. And the first take down here cancels the stop. So when we have a winning trade that hits the first take, that cancels any basically cancels. It's not exactly going to cancel it, but it basically cancels any losing trade. And then everything else, so when we turn like this, everything below this becomes profit. This is used to cancel out losers, and this is profit. So when we have monsters, all of those runs are profit. So the whole system, guys, is built to minimize losses and maximize gains, and that's how you want to be in trading. This is not looking like an ideal situation here, I'll be honest. This does look like they want to extend, so we'll see if they can hold right here around this resistance zone, or maybe poke it and then come back down. But this is 2 holds off of VWAP in the 21, so we'll see. Not there yet, but the bulls are trying to push above the highs. Let's see. Let me look at this real quick. See if we're getting anything better from NASDAQ or what it's looking like. Yeah, NASDAQ's hanging in there, so if the NASDAQ can fail here, we'll be okay. NASDAQ's trying to, not as, ES is up above this candle, or at the high of this candle, the NASDAQ is not, so that's a good sign. Remember, guys, sorry, I'm far away from the mic. Remember, there's no panic here. If they hit our stop, we stop out and then go on to the next trade. It's certainly not. When I said this isn't looking good, that doesn't mean, oh, I need to get out of the trade right now. I'm going to let it hit the stop, because just because I think it's looking bad doesn't mean they're going to rev the engine and go here. They can absolutely just double top this and fail back down, and then people get mad because they're like, oh, I stopped out too fast. 39. Okay, there's our stop right there. We stopped at 206. Huh. They're going to try to get us right back in, but now we're kind of in trend day mode, so we're not going to take this sell just yet. I want to see what happens up here. We're above the pre-market high, okay? So that's the first step in a trend day, is being above the pre-market high. Now the question is, are they going to poke and reverse so they can do this and fail? Or are they going to come back, hold the go, and assuming they hold the 21 and go, then we are looking at a trend day. Now, if this is going to be a C wave, it's probably going to be a trend day. And that's, we're at the top of one of C and pullback. But so we're going to look here. Let me see what the... So once we get above the pre-market high, we have to wait. We can't just willy-nilly go with all the sells, because now we're showing that the market wants to try to expand the range. So the range is 520.17 to really down here at 512. And so the market looks like it wants to try to expand the range. So we're not going to try to get back into that trade immediately, unless, we see them get back below the pre-market high again. So this is the trend day stuff. Now we're above pre-market high. Give me 1 second here, guys. I want to zoom in on this chart for a second. Okay, we are coming into a decent resistance zone here, and you do have the potential for 1, 2, 3, 4, 3, 4, 5 up. So we will watch this area. Yeah, they have made 5 up, so that's an interesting spot. And guys, if you look, so if you just draw a line across, right, you've got this prior low. That was a breakdown area, so they came down here. They broke down from that area. They came up, failed that area. Now they're at that area trying to push through again. So this is a natural failure point for the market. If they do break through, it'll be a squeeze, likely up into this area here. 553.23 if they break through and push. But if they fail, then we can see them pull back in a wave 2. I missed the closing call last night, and the link didn't work. Is the expectation this still a new low bounces your morning call yesterday? The link should work. If it doesn't, I'll go back and look at that soon here. I can't do it right now. Given the bounce here that we've gotten overall, I do think we're probably in one of C, more likely, but they're not totally out of the woods for a move back down 4-5. So if we look at the chart here, This can certainly be 4 and 5, but the pullback will tell that story. If they fail here, we'd like to see a 3-wave pullback and then a go. But they are pushing through a key resistance area. So they push through put support right here, which makes sense that it's at that level. It's at that level that I basically drew the line across on ES. They've gotten through that. Now the question is, will they maintain and sustain this or fail back down? I would like to see this and then this is what I'd like to see. But the buying is fairly strong today. So we may be in a trend day where we don't get a whole lot of trades, which, again, Tuesdays have been rough for trading. Either you get a trend, either we've had trend days or just really choppy, no trade kind of days or slow days. It's just not been great. I guess I should move this to Wednesday or something. This point, next major resistance is 525, then 527. Internals have very bullish reads right now, so that does support the trend day narrative for now. Again, that doesn't mean we can't get a pullback first, and likely will, to test the VWAP in 21 area. It's very rare that you don't have them test that. So usually what you get is you get a breakout above VWAP in the 21, a back test, and then the breakout again, and that's when that's the total confirmation of a trend. I mean, they did back test it here. So they got above the pre-market high here and back tested and broke out. So right now we are in trend day. We may give them one more shot at a sell to see if, we get a failed breakout. Those are great things to trade, which is why we take a shot at it. So they try to break out, they fail, they usually come back to at least the pre-market low. So from here, that'd be a 5-point drop. If not the overall range low, which again is down here around 512, which would be a nice wave too. Can you zoom bigger? The blue portion is not relevant anymore. We can live with half the orange portion. Context of the opening range. Yeah, I think I've done that, but so one concept to understand about trading while we wait to see if they give us a reversal candle here at all. One concept to understand is that this trade did not win, but it's a good trade. You are trading off of a major volume resistance zone, and more often than not, they will reject that zone for at least a winning trade, and then they can resume back up. But that is all the indicator is looking for, is good trade setups that follow through more often than not. And we display probabilities. And the probabilities of a trade, the best probabilities you ever get on a trade, I would say probably 65, 70%. So that means 3 out of 10 times you're going to lose that trade, the best trade setup you can get. You're still going to lose 3 out of 10 times, which is why stops and sizing and risk reward is all so important. Trend days are less common. The more common scenario is some sort of ranging day where they stay within the pre-market high and low. That happens much more, something like this, or they make a high and come back down, or make a low and go back up. Those are much more common than a straight all-day trend day. So keep that in mind. Trend days are not the norm. They are the exception. Now I realize that lately we've had a lot of them because of the super increased volatility in the market. But if you go back through history and you just look at the market in a whole and not in a 2-week window, you'll see that trend days happen probably 1 to 2 out of 10 days, maybe 3 out of 10 days. And then the other 7 are really, really strong range trading days where support and resistance holds all over the place and you win a bunch of trades. So you just have to understand market dynamics a little bit, which I teach all of that stuff in my course. Okay, we may get a trade here. We'll see. Trade Waves Academy course, I teach all of the market dynamics and price action and options and how to use them and why they work and how they work and all of that kind of stuff. How to find support and resistance, how to find highly traded zones, how to use price action to identify reversals, failed breakdowns, failed breakouts. All of that stuff is taught in Trade Waves Academy, which if you get the yearly indicator, you get 50% off of Trade Waves Academy, which having those two things together is very powerful because then you have a working knowledge of how the market works, as well as an indicator that you can use to apply it. And it makes it super easy. The beauty of the indicator is that you just can't look at everything. There's just too much to find all of the things you need to find to say, okay, a trade setup is viable here. And by the time you figure it out, it's too late, but the indicator is doing it in real time at the speed of, at a instantaneous speed and then presenting you with the information. So it makes it super simple. It makes it one screen trading where you don't have a bunch of screens you got to watch. You just have your trading screen up and your charts or your chart screen. And that's it. Super simple. So ES is on board with a sell, SPY is on board with a sell, but NASDAQ is not. So we need NASDAQ to switch before we get a sell signal. That's why you don't have a sell signal yet. So anytime you're wondering, hey, they're moving down, how come we don't have a sell? Probably because one of the charts isn't on board yet. And right now NASDAQ has not met the requirements for a sell signal to appear. So until it does, we will have to wait. This can be frustrating at times because, you're getting in a little later and they're likely to hold that VWAP area. But it's not, anything that you ignore. You just say, we're not there yet. So there we go. Okay, we're getting in at 264 at 521. So the strike is 521. Our stop is going to be 521.50. And I'll be honest, this isn't one that I love. They made a big move down already, but if you're in my group, you know this. There are times that I say, this isn't one that I love, and then it's one of the best trades we ever have. So just because I don't like it doesn't mean that I can see all of the things that are leading to that sell signal to come up. So our stop is 521.50, our strike is 521, and our cost is 264, so we need 52 cents. So that's 316 would be our first take here. And right now they're rejecting yesterday's high. So yesterday's high was 521.69. They spiked through it and they turned down. So another good place to look for potential rejection. And we got a sell signal off of it. At least it printed for a second. We'll see if it closes out that way. But again, we take advantage of that early print or when it prints so that we can try to get the best possible entry. Do you have an exponential 21? Yes, it is an EMA. For 5 waves up and one of C, wave 2 should give us a nice trade. Yeah, I mean, if that's the case, then we should look for a decent pullback here that cuts the move up in half. So what's the move up at right now? We're at 70 points up, so you could see a 30-point move down pretty easily here. Actually, more than that because we bounced yesterday off of a 51.20 or so, somewhere in there. So we're up about 130 off of that. So you could see, theoretically, you could see an ABC. You'd probably get stopped out on the B wave if that happened, but you could see a 60, 70-point move down. Theoretically, however, on these types of days, that would be a gap close, and a 70-point gap close is pretty massive. Not that it can't happen. We've seen it happen a little bit here in recent times where they're closing those kind of gaps, but in general, yeah, that's possible. Now, there is an alternate trend day strategy. And so on that type of strategy, okay, we just got stopped there, 230. We'll give them one more bullet to the downside if we get it, because they still haven't back tested, and the back test is really what you're looking for to confirm things. And that back test can fail. So if they give us one more sell here, we may take it. You'd want to see the ADD dropping a little more here with a pullback, but I use a 3 strikes and you're out policy. So if we have 3 trades that don't work out, then we just stop trading for the day and we wait for a better trading day. It's obviously not an ideal day. And does that mean we'll miss a move occasionally? Yeah, of course, but more often than not, you're just going to get stuck in a trading loop that isn't working. Hi, good morning. I love you. I hope you have a great day at school. So the indicator has given us 2 trades today. And if you look at where they came from, you understand the trade. So when you look at, when you're evaluating something, whether it's my product or somebody else's, look at what and why, right? So we got a trade here. Why? Well, we hit the pre-market high. They rejected. We have put support right here. So that's going to be heavy resistance. All of this is going to be a place that you would expect rejection on a standard day. We didn't get it. Or we got a small rejection, I should say. We didn't get follow through. So that is a place you want a trade to be entered when the conditions are right. The second trade came off of yesterday's high. Very common rejection point. Come up, fail, pull back, then they can come through or just fail altogether. Another place that when you see conditions right, so they spike through it, turn down. When you see conditions right, you would expect a rejection. So again, it's trading the most probable outcome. However, on trend days, support and resistance don't hold, which is why we try to identify them as soon as possible. Jacob explains impact of option volume. Please explain impact of option volume and how to tell if they're buying or selling the option. So I don't necessarily understand what you're asking. I use a site called Mentor Q, which gives me these gamma levels, which is telling me where the highest level of option interest is. So right here at 520, where we got the trade, the first trade, that's where one of the highest levels of option interest are. Typically, those levels hold more often than not. If they get through them, you get squeeze effects. The next highest level up is 525, and then you have a high volume level up here at 527. So these 3 levels are major option levels with high volume, in this case, puts. So that's going to keep pressure down. When they come into it from the bottom, you expect rejection. When they come into it from the top, you expect a bounce. So more often than not, that is what's going to happen. But obviously on trend days, they blow through those things. That's the whole point of a trend, is it gets through resistance or it gets through support depending on which way we're trending. Again, trend days are not the norm. They are the exception. But we've been in a highly volatile market lately, and that's, how it is. But in general, those areas are great to trade off of, assuming all conditions are met. And that's what the indicator gave us a trade here off of this high volume put level, and then off of yesterday's high. And right now they're still messing with yesterday's high, so they've poked above it, they rejected it, they came back up to the previous poke above, and they're kind of still rejecting. So this could be a spot where you see some consolidation and then a pullback. It's possible. Given the overall look of the market, I would say more likely you are to see consolidation and continuation. However, we trade what's in front of us. But if you want to know George T., if you want to know an in-depth view of options volume, gamma, delta, vega, what am I missing? Theta, all of those things, that's all in TradeWaves Academy. I do a 2-hour course on just that. You can buy just that one for $67 on options, or you can buy the whole course. But I go in depth on how options work, how to identify them, how to identify squeezes and what's going to happen. Those are all really important things to know when you're trading. I said if they got through here, they would probably squeeze. They squeezed 2 points immediately, so 20 ES points, pulled back tested the breakout, and now are pushing again. So as of right now, like I said, trend day rules are pretty much in effect. We have 2 strikes against us. I have a 3 strikes rule, and we're in a trend day. So will I take a third strike? It depends on where it comes from. If they press up into here and we get a sell, then yeah, I will probably take that one. But in general, on trend days, you're kind of ignoring the sells. And if you're wondering, so maybe you're saying, hey, why didn't we get a buy? Well, you did. It was right here. And they came up. Now, you have to complete a sell cycle for buys to reappear. So this is a buy cycle. When the sell appears, we are still in a buy cycle. The market is still in bull mode. However, what the indicator is saying, we are at a key level. We are seeing weakening in the buying. Things are not looking as strong. So this is a great place for the market to stop buying and start selling and get into a sell cycle. But it has to complete a sell cycle for a new buy signal to appear. Otherwise, it's just a sell stop, and we're still in buy mode. Now, there is an alternate strategy where if you think that we are in a trend day, which now it does look like we're starting to point in that direction, when you see sell stops, you can treat those as buy signals, and then you would have caught this move here, or however high they go. You probably would have stopped out here, but you would have caught that move up. I don't use that strategy. It is a strategy that some of my members use. And it's been successful. So I put it out there as an option because there are 100 ways to trade, guys. You don't have to trade exactly how I trade. How I trade, I have my own rules. I have my own systems and stops and stuff that keep me making money. So it works for me. If you have a different way of trading that's disciplined, has good stops, and has a good risk-reward ratio and good understanding, then you can use that with the indicator. It doesn't matter how you trade. What matters is that you use disciplined trading with good risk-reward and good stops. That's it. There are a million ways to trade the market. How to chart the option movement, the actual option chart. That's going to be too much for this type of call. That's stuff I teach in, like I said, Trade Waves Academy. This is more going to be for highlighting the indicator, price action, stuff like that, showing you, the ins and outs of why and how the indicator works. As a note, guys, the coupon code does go away after the live, so this is special for the people who chose to join us for the live call, which I appreciate. Thank you guys for being here. I realize it's likely going to be a trend day, which isn't always great, but it is what it is. We just have to deal with what the market gives us. And in general, trend days are horrible day trading days in general. The reason is, if we zoom out over to the, we can just zoom out a little bit. By the time the market opens, okay, by the time the market opens, you have this move. So if you want to get long here, we've already gone up 120 points on the SPY from the low. And now you're kind of chasing, right? Can they continue? Of course they can continue. Can you use the alternate trend day strategy? Of course you can. But what you're looking for when you're day trading is you're looking for the market to hold supports and resistances. And assuming they can do that, you get excellent results. But trend days don't hold support and resistance, which is why they're terrible day trading days. You're going to have losing days most trend days if you're trading properly. If you just got long today because you said, I'm chasing the move, if you have good stops and you have a strategy that you use, that's fine. In general, you're chasing. You've already missed the major part of the move, so now you're looking for the next move. And the next move, is going to be likely down. Can there be setups where the market moves and you find a breakout level and you get long? Of course. Um, so this is looking a lot like it's going to come up here. So I said we'd squeeze if we got above this level, the ES level that I highlighted, which is basically this put support level. We are squeezing. They're getting far away from VWAP in the 21, and they are now through this last resistance zone. So they're very likely coming up to this 525 zone. If we get a rejection there, that I would be interested in that. Also, 527 would be a really strong zone. That's the gap fill basically here. For this, it's an after hours gap, but it's a gap nonetheless. So that would be a very, very strong level as well that we'll watch. So the squeeze is on. Again, once they break a resistance level, that's how it works. You get a squeeze, and off we go. Now I think it's starting to become much more unlikely that this is wave 4 of C down, and much more likely that we're in a version of C up towards that 56 to 5800 area on the ES. That is going to be a major rejection zone. And then again, how we react from there will be very important. All right, we are far away from VWAP and the 21, which can trigger a trade. So we may see a pullback into that area here. We'll see if we get anything coming up on the charts. There is a calculation for that distance. So when they get too far away from these levels, they're going to come back and test them eventually. Jacob, are you looking for a pullback down, then probably a swing long, or still need to go higher for you? No, on any pullback here, I'm looking to get long on a swing for sure. I do think we're very likely in the C wave up toward that 5,600 area. We're looking to complete one of C here. And then on the pullback for 2, we'll have a great setup for risk reward on that and be able to look for, 40, 50, 60 SPY points of gain versus 10, 12 points of loss. So you're getting between 4 and 6 to 1, which I think is a really good risk reward for a really good setup. I would probably play that 6 to 8 weeks out. I don't think it'll take that long, but There are lots of times that the market kind of messes around in wave two, or wave two, one of three, two of three, and then three of three take a while to play out, and you just want to give yourself time. So yeah, I'll probably play that a little over a month out. And welcome to the stream, Brad. Glad to see you. Brad's a avid user of the indicator. All right, we're going to take this one. $2 at 522, guys. That's our entry. Our stop's going to be 523.10. The biggest thing I'm looking for here is a tag of VWAP. So that gives them a couple of things if they do that. They've broken over the pre-market high, come back, tag VWAP, and set up for a trend day, or they can fail here and really mess up and go down. That's what we would like to see. Obviously, we don't always get what we like to see. We got in at $2. Our first take is 240. So we'll be ready for that should we get it. Get that set up. You always want to be set up to take your profits. So you should have a limit for that, a limit setups where it hits and it automatically goes. And I always close half my trade there. Then I let the rest of it run and adjust accordingly from that point. There's going to be two main issues for the bears before they get to VWAP. They got to get through here. Well, this break up candle here, and then they got to get through this one here. If they get through this pre-market high at 521.69, they should come down and tag VWAP. But they got to get through those two zones first. One thing I will say is if you're watching a trade and you're on the edge of your seat and you're tapping your desk and you're emotional or worked up or nervous or scared, you're probably using too big of a size because you're worried about the amount of money you could possibly lose on a trade. But if you understand stops and how much, what the loss will be, and you understand that there are going to be losing days, and you understand that if you use proper sizing, it doesn't matter, you shouldn't be nervous about a trade at all. Everybody gets some level of emotion about losing money. There's nothing wrong with that. I get that. But you shouldn't be sweating out a trade. You should be watching it and saying, okay, here we go. Can we get to the next price? Great. Okay, we didn't. That sucks. One of the and even if you're at a small amount and you're still doing that, Tony Robbins, which I think he stole from maybe Dale Carnegie, but in any case, Tony Robbins says, that's who I heard it from, so I'm going to give him credit, but I think it comes from Dale Carnegie. If you can look at a situation and understand what the worst case possible outcome could be, the absolute worst case, and you're okay with that, then you should have no fear in your life heading into that situation. So what is the worst case scenario? The worst case scenario is Trump tweets that he's taken off all the tariffs and something happens or whatever, and the market shoots up 50 points before you can get out, and you lose the whole trade. You lose almost all your money. That is a possibility because the market can move very quickly on those types of things. That's a definite possibility. If you're okay with that because you've sized properly and you understand that you could lose 100 of those trades which are very unlikely, by the way, extremely unlikely, that one, you're going to lose your whole trade. Um, there just aren't that many times that the market moves in a way that's crazy. Um, if you understand that and you're okay with it, you should have no fear in the situation or no real emotion, to be quite honest. You should just be kind of on to the next one. I understand what the risk is. I understand what the reward is. I understand the system. I understand what I'm doing with my money. That's the biggest thing I tell my traders in my room is you can follow me. You can do all of my trades. You can do learn from me. You can do all of those things. But what I would want to do is I wouldn't just want to blindly follow my trades. I would want to know why we're trading it. I would want to know what the reasoning behind it is, what the risk reward is, all of the strategy behind it. And then I want to learn that because this is my money. This is my life. This is my future. This is my kids' future. I'm not playing with I'm not at a casino with $100 in a slot machine. So I need to understand how my money is being used. So I would want to learn that personally. I would want to know how and why. One, because I want to fish for myself. I don't want to have to take a guided tour every single time I want to fish. And two, I want to know what I'm doing with my money. Like I said, that's my future. That is everything I have for the future. And if I don't know what's going on, then I'm just risking money with no real understanding of why. And that is, to me, playing with fire. Being lazy with your future and your money is not a place to be lazy. That is a place for me to learn, to have a background, or to just not do it. Okay, we got stopped there. Not a good day. Stopped for 179. Okay, so that is 3 strikes, and part of it, guys, there are 3 strike days. We're in a trend day. I think I've said enough, but if you didn't hear it the first 14 times, trend days are horrible for day trading. We gave it a couple shots. We gave them a chance to come back and tag VWAP there. We gave them off of the yesterday's high resistance. We gave them off of the pre-market high resistance. They were unable to follow through on any of those. I don't continue to throw money at these kind of days because there are way better days to trade where you're 4 for 4 on trading. And those are the days that I want to keep investing on. These types of days where you're hoping the market gives you a pullback instead of seeing that the market should. They're just not great. You should just walk away. For me anyway. That's how I trade them because there can easily be another one here that fails, another one here that fails, and all the way up you can get failures, and that's just no way to trade. So we have a trend day set up. It's looking pretty likely that it's going to continue in a trend day. That doesn't mean we can't have pullbacks. That doesn't mean they can't come back and touch VWAP and then go. But it does mean it's not a great trading day. You're very unlikely. Well, you're not going to get a buy signal unless a sell signal comes through, and you're very unlikely to get something like this. While possible, it's just not how a probability works. So that'll be all of the trading for today. Unfortunately, it's a short day, and or maybe fortunately, you took your 3 strikes and you go fish or something, go for a walk, get some exercise. Again, don't overtrade these things, guys. Don't stay in here trying to do anything. Is it possible that you could miss a move? Is it possible that they can come up here in the next 30 minutes and then do this? Of course it's possible. Is it probable? Not probable, no. So I'm not going to take something that's not probable and gamble and lose more money when I know that there are high probability trades on other days. So we took our shots. They did not come through. Part of trading, part of learning. Things you'll learn in my room. Remember, the coupon code goes away in about 30 minutes or so as I get the people who already signed up registered and done. Then I will turn the coupon code off. So if you do want to take advantage of that coupon code, please do so. Otherwise, we'll just be watching the market trend higher. So I am going to end the stream. It's a quick one this week, unfortunately. But again, that's how it goes. So thanks, everybody. We'll do it again next week.